morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analysts at Trade the Chain. My name is Nick Mancini, Director of Research at Trade the Chain, joined by CJ and Monte, both senior research analysts, and we are here to break down everything going on in TradeFi, crypto, macroeconomics, and tying it all together for you to make the most sense out of where markets are heading this week. We are, of course, part of Trade the Chain, fantastic data platform, as well as with a community on the back end to make sure you are aware of everything going on at every single point in time. We are also sponsored by Dydex, a decentralized trading platform that you can trade decentralized derivatives on and completely own all of your capital. There is no centralized exchange risk like there ever was with FTX. Or any other exchange that we can mention. So hop on over there at trade.dydex.exchange/r/trade-the-chain, and you can get reduced fees and earn Dydex through trading on their platform. So without further ado, let's go ahead and dive into what is going to likely move markets this week. There's not too much important data today through Wednesday. Always watch out for a couple of Fed governors speaking, as a couple of them were a little bit dovish last week, in the face of dropping markets. But always, important to hear what they're saying, because their collective opinion makes up the decision. So, but I think the biggest things this week are CPI and PPI, and although the predicted numbers aren't here, one thing I just wanted to point out is this is CPI. And obviously it's been dropping pretty month over month, but this week it's expected to rise. So previous was 3%, we're expecting 3.3%. So very much something to consider there. And a lot of the narrative has been inflation decreasing, and now we may see an uptick, and that may not carry on for the rest of the year, but it's important to understand that is maybe the first print that we've had that's increased in quite some time. And then core CPI, which is minus food and energy costs, is actually expected to tick down to 4.7% from 4.8. And of course, if you kind of carry over the context, energy prices have been rising, both oil as well as gasoline. And since core doesn't factor those in, we're seeing CPI rise, core drop a little bit. So it's likely due to some energy costs, along with a few other things, but that's probably the main impact. And so it's important to understand that context as well. If it's just energy, and we understand why energy is increasing on a timeline perspective, it's the summer. We just saw OPEC do cuts, so it makes sense there. That could be abated quickly. So it's always important to understand the context of these inflation prints. But those will be coming on on Thursday and Friday, and may impact markets obviously if it is higher or lower than expected, which we'll talk about a little bit when we hit the charts. So I think best place to start, we've started here a lot, guys, is the DXY. And obviously, I think Monte was talking about possibly that deviation last week, and that ended up coming late in the week. And obviously, we've been unable to get back above that supports now turned resistance. So we're kind of sitting in this precarious area, and we have been talking a lot about the fact that if DXY decreases, it's usually kind of a bullish boost for risk, and if DXY is increasing, it's usually a bearish bane for risk. So we're looking at this and the greater context of the inflation print this week, and a bunch of other weird news, along with the Fitch downgrading the ratings and all that fun stuff. So are we thinking that DXY is going to drop here and impact markets this week, or are we thinking possibly flat, or is there no trade here? Are we completely undecided of how this may impact markets?
This is a tough one for me, because I think that sometimes I love the analogy of the dog wagging the tail, or the tail wagging the dog. In some instances, the DXY is the dog that wags the tail of the markets. And when we see the DXY dropping, we see the tail start wagging, and we see risk on assets take off. But in this instance, I think the tail is actually going to be wagging the dog. I think what we're going to see is a lot of the price action in the equity markets really start to affect the DXY. I think people are going to start to inject capital back into the markets. We talked about this morning, some narrative failures that we had in terms of like Apple beating earnings and then plummeting. That's a sign that you should definitely take note of. And when you see that happening, to me, it spells risk on price action. So I think that the green line that heads down towards that 101 level is the more likely scenario, solely based on the fact that I think that we're seeing volatility in equities and people are going to start injecting capital into the equity market.
That's a really good point. And I think I tend to agree with that outlook. So it's something we'll have to keep a close eye on. I mean, it's never anything that we're going to be able to say, it looks like X today, so I'm going to do Y tomorrow. But I do think if we do start to see this seeping lower, that kind of correction conversation begins to relax. And obviously, if this begins creeping higher, then that conversation's back on. So I'm looking at the 102.4, 102.5 is a very critical level over the next couple of weeks as we digest some data and this possible inflation flip, et cetera, et cetera. So let's carry that over to equities, because I think this is fascinating, and obviously the title of the show is a correction imminent, and we kind of have had one already. And we talked about this 4-hour estimated 200 moving average as being significant, as it's been the bounce zone for most of the bullish moves throughout the year. And obviously, if it continues to hold this level, it may imply another bounce. So obviously, we did get if you were shorting this area, you were not having fun, and anyone who was longing this area is currently in profit. But then it begs the question of when do they reverse? Do traders try and ride this higher? And I think it's actually a really difficult question to ask. And usually we're pretty on the money in terms of our bias and directionality here, but I truly can't guess whether this is heading higher. I think from a technical perspective, seeing these lows sitting here, if it starts to relax here, it's probably at least going to drop back down to 45.11 on the futures, maybe down to this the moving average itself. But if it continues to hold this level for 2-3 taps, then I definitely think it's going to end up moving higher, in my opinion. What do you guys think? And if you want to pull up your chart, that maybe SPY, maybe NASDAQ, feel free.
Yeah. So, do you mind if we just three of us talk? I'd love to look at you guys without the chart, and speak and address you. There it is. That's wonderful.
Oh boy, he's about to address us, Nick. Brace yourself.
Yeah. I mean, so I'm with you in terms of like the indecision there, Nick. I think that the story that we've told, the entire year, or that has been told by the market, is like you've had all these shorts get liquidated and forced to cover. Now you're at the point where, it's neutral, and you're starting to even see positioning skewed to the opposite direction, like crowded longs and things like ES and Dow, which have actually like created short signals based on like the COT system for the first time this entire year. So, I might get stopped out of that Dow short. We'll see ultimately what happens. But like, I think when you look at the positioning, the key question about what we're going to have, like how we're going to have to navigate these next few weeks, is like, if a dip does come, are speculators, and large and small, going to buy it, or are they going to short it? Because that action right there, and that could be in the next 2 weeks, it could be in the next 8 weeks, I don't really know when. But that action of large and small speculators, I think, is going to really determine where we end up going into like 2024 and how we're going to have to position ourselves. So right now, just kind of, sorry, I'm getting a little distracted by the comments of Monte's hair. I went to the Barbie movie a few weekends ago. Kind of reminds me of like,
oh geez, don't say that.
Hey man, Ryan Gosling's, whatever. Wasn't trying to be an insult or anything.
Okay. I'll take Ryan Gosling. Never mind. Go ahead, proceed.
So yeah, I mean, what do you guys think? I've basically laid out kind of, if you're like a coach, mapping X's and O's, like that's basically where we're at, right? Like,
yeah, no, like that is, I think that's exactly where we're at. And I mean, we've seen some pretty significant pullbacks throughout the year when the S&P or ES has been running. But this time, I think the biggest difference, like you pointed out, CJ, is kind of the difference in positioning. And I think it's going to be really important to just keep an eye on like the major indices. Keep an eye on the S&P, because I think that much like crypto, we talk about like that flow of capital model where Bitcoin is the most or least volatile. Then you have ETH being the second most volatile. And then you have the altcoins being the highest beta assets, right? I think that if you apply that same kind of thought process to the equity markets, I would say the NASDAQ would be the highest beta, the S&P would be in the middle, and then you got the IWM and the Russell being the least volatile. So what's going to be really interesting to me is going to be how all of those markets compare with one another, and if we see any interesting divergences between NASDAQ and ES or between NASDAQ and Russell. CJ, I know you've been talking a lot about Russell and, kind of how traders have been still just relentlessly shorting it, despite the fact that it continues to grind higher. I'm not too sure if that's still the case now, but, I think that's going to be the biggest thing for me to watch, is just like how the capital, where the money's going between those three major indices, in terms of the NASDAQ, ES, and the Russell. I think we'll see that same sort of flow of capital model that we often reference when it comes to crypto play out in equities. So that's kind of what I'm expecting there. But CJ, if you disagree with me, please let me know.
No, I mean, I feel like that was kind of the point I made in the show earlier this morning, where it's like NASDAQ's supposed to lead traditionally, followed by ES, followed by Dow and Russell, just in like how volatile those indices are in relation to one another. So what we saw last week paired with the news failure is like you had Dow leading, NASDAQ creating a lower high, ES still managed to create a higher high, but typically you're not seeing tech lead, or at least you didn't last week. So, maybe that's like a technical, relative strength thing that could be bearish, but yeah, I mean, we'll see.
Yeah, interesting question in the chat here as well. If you guys don't mind hitting that.
Any?
Yeah, about any. I don't know if you guys have been trading that at all or looking at it at all, but it is pretty interesting. And I'm just going to pull this up first, just real quick. We don't even need to really look at the chart, but I think this is some pretty interesting information. This is their 2023 first quarter, from their first quarter earnings report. You can download the entire thing here. I'll go ahead and post this link in the chat right now. And it is interesting because, everyone always talks about Mara, Riot, whatnot, but there are some smaller miners that are finding success during this time of like low Bitcoin volatility. And one of them is Any. So, okay, take this with a grain of salt. This is on their website. So they will, of course, play up the highlights. They say it themselves. Here are the highlights of our recent developments. But revenue increased by 1.6 million to 3 million during March, the quarter ending in March 31st. Now, that was a while ago, March 31st. Keep that in mind as well. But the company mined 110.25 Bitcoin from January 1st until March 31st. That is not bad when it comes to, a mining facility. Like, that is got to be hundreds of terahashes of power. So, like, it's not insignificant, right? Like, that's a lot. Okay, I could have read the next bullet point. The company ended the quarter with 446 pentahashes per second. That's a strong number. Not quite in the realm of Mara or Riot, but nonetheless a good number. And they're operating, I'm assuming, in profit. And then lastly, 3,900 miners began hashing in May with an additional 6,500 expected in the next 60 days. So I find that to be very interesting. And their whole play is like carbon neutral Bitcoin mining. So it's going to be interesting to see like that's more expensive than what Mara or Riot are doing, right? Mara or Riot, they don't care about their carbon footprint. they never have made a statement about their carbon footprint. Every time or in the past, when people have talked about the carbon footprint of the miners, they've gone down hard. Any is an interesting play if you don't want the downside exposure to that, that whole debate about whether or not Bitcoin mining is, worth it for the environment. Not even gonna,
that debate won't come up unless we're above 60,000. So
exactly,
I think
right.
we're pretty good.
Yeah, we're good.
No one cares in the bear market that argument always goes away.
I will say on that chart, like Monte has a great point. Like if a lot of their value proposition is the fact that they're carbon neutral or energy, green energy, then maybe that's an ESG play, and maybe that's something where it gets stuffed into an 0.01% of an index, somewhere. But there's a reason this has been performing much poorer than nearly every other mining stock. And I think you have to take note of that. Just because it is a mining stock doesn't mean that it will follow Riot and Mara or whatever. So I will say, just based on context here, buying these lows and waiting 3-4 months has historically been good. But if you pair that into the grander context, and we haven't even gotten into Bitcoin or Ethereum yet in terms of charting or our outlook, but if those drop, I would assume that this stock is probably not going to see that same cycle that it's seen since the beginning of 2023. Because if you look at the crypto cycle, it's obviously been mostly rising higher. This is generally flatlined, and of course, if crypto drops and you've got a flatline stock, I don't see a flatline stock doing well in a poor crypto environment. So we haven't talked about crypto and what our feelings are, and that could obviously be, bullish on a, 6-12 month time horizon, which I don't disagree that it could be. But I think there's probably something better you could buy in terms of you percentage basis gains over, a 6-month time period, in my opinion.
Oh yeah, without a doubt. That's absolutely true. And I think one great thing about this any play is that you won't have to wait very long to find out whether or not it is in the same realm of the other crypto related equities. It has earnings on Wednesday. Let's look at the expectations just real quick. Oh, they aren't even provided. But anyways, Mara has earnings tomorrow after hours. Riot has earnings Wednesday after hours as well. I would say if you did want to make a play in any, I would wait to see how Mara reacts to earnings, because it could be a very similar situation to Apple where like they beat on the top and bottom line, and if they do, then like price could still plausibly go down because we're in a risk-off environment. But I think that more importantly, what this chart will do, or what the earnings report from Mara will do, what the earnings report from that we get at the end of the day tomorrow, it'll give you some insight into the profitability of miners in general, right? So we'll know whether or not, or at least have a better ability to estimate whether or not Any and Riot are going to beat earnings based on what Mara did. Because first of all, Mara and Riot are very comparable in terms of the amount of hash power they have. Cut that in half essentially, and you have Any. And I would take a look at, tomorrow, does Mara beat on the top and bottom line? How does the market react to that news? And then from there, after having that information, I feel a lot more comfortable making a play on Any. So
that's a good point.
That's my answer, Jimmy. Sorry, it was a bit of a long-winded one, but I hope it provided a little bit of insight.
I guess I'll ask the obvious question of like, why did it open at 10,000 and now is trading at $2? Because I feel like there's this psychological thing during bear markets, and I've been susceptible to it too, where it's like you want to find the secret gem that does 1,000x that nobody sees, and that's fine, I guess, for like allocating small end of like the risk pyramid, if you were to think about risk as like a pyramid. Whereas like maybe some of the more obvious plays, like you guys had mentioned, that's what I would be hitting like the majority of my capital with.
Well, and to CJ's point, like if you're looking for that type of trade, you're not going to find them as much in the regular TradeFi market as you would in crypto. Like if you're looking for 1000x, Pepe on a likelihood basis is going to probably do better than a miner. If you were just to say, from pure memeability perspective, I'm not saying this is likely, but I wouldn't buy the miner down 99% versus the meme coin down 99%, because the meme coin is going to have a different psychological factor to it in the bull run than the miner will. So I could be completely wrong there, but even, GameStop and GME and things like that didn't have the runs that Dogecoin did or that Pepe did in the bear market. On a percentage basis from buying early, but if you're looking for that kind of trade, you should have very small allocations to begin with. And I'm just saying you may find it better in terms of a token than a stock in that perspective.
I mean, you guys listening could do whatever you want. We're not, when we say you, we're just talking to ourselves.
Yeah.
None of this is
mainly talking to Monte.
None of this is advice.
Yeah, they're mainly talking to me because I'm the one that needs to hear this stuff.
And so let's move into Bitcoin and Ethereum, because we just saw some really weird price action today, and it's been extremely volatile. But I do just want to have a question to our audience, and I'm open to all criticism all the time. Any one of us can always be better. But Mike and Ryan, I understand you guys may not enjoy how I start or how I transition or whatever, but if there's any suggestion on what I can do better, please just throw it in the chat instead of kind of just belittling how we kick things off. I like to start with the macro CPI, whatever's important, because that builds my thesis throughout the week and how I approach each day trading or long-term trade. So if there is something I can do better, or CJ and Monte and I can all do better, please privately or publicly let me know what it is, instead of just being a little bit negative, because I think some positivity or at least pushing in the right direction is where we can all go. So let's move on.
Yeah, I'll put it a different way. Just shut up unless you're going to say something that's either a question or something useful. Just shut up.
Hey,
there you go.
That's Monte's pulling no punches here. But so just to move on, just because I think we that just needed to be said. But looking at the Bitcoin chart, and I talked about this on the B3 radio, and regardless of anyone's opinions about how I talk or share trades, if you go look in the TTC community over the past several weeks, we've been absolutely murdering crypto trades. We've been entering and exiting at fantastic times. So the key numbers in my book for this week are the highs up here around 30K, the lows down here around 28.5K. Mondays have been historically bad, so the general expectation was a drop down to these equal lows. We obviously did not get that. We had a nice little buyback, and I was in the TTC community during the show and before, letting people know that I was closing trades due to these tweezers and this buyback action. Now we're sitting at directly mid-range again, which is exactly equal with the 1 hour estimated 200 moving average. So this is a critical pivot point. If you can get above 29.2.5, you can change the market structure and have a chance to push bullish. So basically flip this level into support as it's kind of demonstrated here. Then you have a chance to move up to 29.5 or potentially these highs up here. So if we flip 29.2, 29.250, I'm going to dive into longs. And then if we get rejected here at this level again, I will look for shorts at least back down to this level or possibly lower. So that's, there's no trade for me right now because I just exited after this buyback on my shorts. So now I'm looking for longs if it can break this level, because we will have new market structure. Or if we reject off this level, we have old market structure and we still have untapped lows that I will then target. So that's how I'm looking at it. And just general suggestion for how I typically approach Bitcoin and Ethereum, I never enter a trade in the center of value. And this is basically value, in my opinion. You got the highs, you got the lows, and everything else in here is a bet on basically one of those directions. So I don't want to just sit in the middle and have, an equal probability of higher or lower. I want to wait for my confirmation on what would bring me higher or my confirmation on what would bring me lower, and then I'll kind of approach that trade. So that's kind of how I'm looking at BTC. I also pulled up open interest down here. You can obviously see that we've had a lot of, volatility in terms of open interest. But considering this move just dropped open interest, quite a bit, I want to see this maybe claw back a little bit as overzealous shorts close. Because if we do get a squeeze higher, that could be shorts closing. So if we kind of reset open interest down here, kind of that 110K, maybe, 105K, something like that, then you'll probably see wherever we're at in that position, maybe we're up here at 30K, you'll see a lot of shorts come in, and then maybe that brings us back. So it's just, good context to kind of bring all of these things together. But I don't think you should be really making a a strong trade until we're above 29.2, or unless we reject off 29.2, in my opinion. And even if you wanted to be more smart and more patient, wait till we tag 28.5 for potential really good long squeeze, or I mean short squeeze and move higher, or wait till we grab 30K. Everybody stacks longs here, and maybe it pushes us back lower. So I think those are better trades than doing anything now, because I think the trade that was the best opportunity is already kind of washed away. What are you guys thinking? Are you guys interested in BTC here? Are there any setups that you guys are thinking of heading into the week?
Just let me know when we're above 30K again.
Yes, yeah, I feel like, that's kind of, unless you are like a masochist like myself sometimes who feels like he needs to trade almost every day. CJ makes a really good point. Unless we're above 30K or we're rejecting off 30K, that's probably the much better trade option than the 29.25 number.
I really like, the fact that like the crypto equities are, sold off, gave a little bit back. Just content to continue to watch that weakness. But as for like trading it, I think it's just difficult because when it goes down, it's like a very slow bleed that you have to be extraordinarily patient with, and you get these, violent whipsaws up. So you really got to have conviction in the shorts, I think, if you are going to be trying to like ride this downtrend. But I don't have a whole lot to say about Bitcoin. There are some other setups that I am pretty excited about, but
for other coins or
no, not coins.
Okay.
Not coins. Boring.
Not coins.
Boring.
All right. Well, let's cover Ethereum really quick, because usually if people are asking about Bitcoin, they're always asking about Ethereum. And then let's talk about a few of the things that CJ is looking at, because I'm curious, because I'm stuck in my little crypto hole, and I'm curious to see what else is going on out there besides DXY and equity. So I think Ethereum is in a bit more of an obvious position in terms of trades. It continues to, every time it has fallen beneath this 1830 level, it's obviously clawed its way immediately back. So if it reclaims this 1830, maybe you get some longs up here to this 1845 level. Maybe, if Bitcoin's heading to 30K, ETH is heading up to this 1860 level, which was previous resistance. But then obviously if you're short, then a rejection off of 1830 could send you right back to these equal lows again. So in the same context of Bitcoin, if you want to be overzealous, if you want to take those chances, your pivot point for Bitcoin, 29.25. For Ethereum, it's about 1830, 1828. So you can kind of pick your poison there. Or like CJ and I said before, maybe you wait if it drops down here to add along on a kind of a double bottom, or maybe you wait until you see what Bitcoin does around 30K. If it gets there, to then add shorts, maybe around this 1860 level. But I will say, in terms of an Ethereum versus Bitcoin trade, this is a pretty clear setup. Rejects off the lows, it goes lower, accepts these lows, it's going to end up trying to at least grab 1840, 1845, in my opinion. So that's just a quick overview, because I know our viewers definitely always, want to see what our opinions are. So, but CJ, Monte, are there anything else that's more interesting, that's giving more obvious setups, that's not as difficult, both mentally and physically to trade than Bitcoin and Ethereum?
Yeah, I think there are a lot of opportunities in the crypto space, actually.
And Monte, we owe you we got to give you your flowers. You called coin to a T last Thursday with the close quickly. I remember was kind of your story was we don't want to be in that trade too long. So good job on that one, Monte.
Thank you, sir. Thank you. But I want to talk about some crypto assets that are underperforming relative to Bitcoin, because I think CJ made a pretty interesting point earlier. Look at the crypto related equities today, down like 4% across the board. Bitcoin's green on the day. And like a lot of people attributed Bitcoin's positive price action to all the equities and, obviously, of course, the ETF, but, that pumped the equities as well. I think one thing that's great about Bitcoin that's not talked about enough is it's like a black hole of capital. Like any money that flows into the space, I feel like eventually ends up flowing into Bitcoin. So whether it be an investment into, a miner or, an altcoin, it always flows back into big. I'm sorry. For anyone that missed that, CJ just removed the film off his new webcam. He's headed since Friday, so that means it's been on there for 4 of our shows.
And it still looks good. It's a good webcam.
No, now it looks a lot better now. Now it's like really HD. Holy nice. that was quite funny, CJ.
All right, go on with the black hole of liquidity you're talking about.
You made me lose my train of thought. But I mean, you got to think about it. Like all these altcoins that pumped in the last like 6 months, all that capital flows back into Bitcoin eventually. People get liquidated, the money flows back into Bitcoin, and it goes up. And I think it's very encouraging to see Bitcoin up in the day while the equities like crash. It really tells me that like below 30K, and in that 29K to 27.5K range, there's strong demand for Bitcoin. But the same can't be said for all of crypto. One coin that I'd been talking about last week as a short play that I really, really liked was Comp. I am still in this one, although this would be a good level to take profit because, as you can see, we are reaching what was formerly support way back here in the middle of July. We are at that level here. So if you haven't entered, I mean, this also could mark a breakdown level. So if we get something that's like, let's say, we get a bounce off this level, it starts to head higher, and then it comes back down and breaks down through this level, that point right there would be a terrific trigger for entry if you have not yet entered. I think this does ultimately retrace back to where it was. We've seen other OG DeFi stocks make the same move, but right now this one's falling harder than pretty much any other crypto asset in the space. Look at this bearish volume. We still have 5 hours left in today's candle. I think this thing ends up breaking through this level and ultimately heading back down towards plausibly the, I'm talking like $32 to $40 level is my target for this one. And, the great thing is there hasn't been too many short squeezes, and the funding rate is still relatively neutral, telling me that not too many people have shorted this. It seems like a lot of this has been people that tried to catch this uptrend, taking profit and exiting their position. So that tells me that there still is potential for this thing to move to the downside. It's just one trade that I have on my radar that I shared with the Discord community last week, but I'm sharing with you guys now. I still think that this is a viable play if you don't have exposure to the altcoin market. So that's really the only altcoin that I'm trading right now. I'd also mention that Algo had an interesting setup, but it's not as, I don't think the R&R is as good as
Gary Gensler's favorite coin.
Yeah, apparently. But I just don't see, the R&R just isn't as good as it is with Comp. So for me, I'm sticking with Comp right now. You could also look at things like Maker as a possible laggard for this whole thing, but it has been relatively resilient despite the fact that most of the other OG DeFi products have fallen pretty hard. So for me right now, the only asset I'm short is Comp. I'm short 1.5 or 1.6 times leverage on Dydex. And yeah, like I said, it's been working out well. I'm gonna probably take some profit here, but if we get that move that I was talking about, bounce from that level of support back up, then we get that rejection and we crash through below that level, just set an entry trigger at that level. If you get filled, that's great. I think that thing has some more downside potential. So that's my kind of trade of the day.
How'd you come to settle on 1.6?
That's a good question.
What, for the
It
leverage
was just,
number?
no, it was more because I was also in a maker long at the time, so I was trying to
I got you.
make myself a little bit more delta neutral because Maker and Comp actually had been diverging. Now they're back converging again, so that hedge play didn't really work out. I closed the Maker position and just remained in the Comp position. But that's the great thing about like being in a hedge like that is like, if half of it still works out, you can close the other half. And it's like buying insurance. Okay, my house didn't burn down, but I still have a house.
And what Monte's saying, the fact that he's holding shorts is, kind of piques my interest a little bit, because I'm transparently, I'm out of all of my shorts. I'll also be double honest. I held my shorts from up here on Friday, added up here yesterday, and then closed about halfway down. I didn't take, I took about 25% profits down here and closed on this bounce back. But now that we're kind of, we're sitting at that area that I mentioned is critical. Monty's still talking about shorts. I'm looking at BTC open interest. And basically all I'm seeing is this is just likely a bunch of shorts closing on that squeeze, right? Because most of them were probably entering, in this mid-range anyway. But we're not seeing, nobody seems eager to jump into any trades. This is definitely not indicative of anyone jumping into longs. And I would assume the longer we hover here without breaking above the 29.25 level is I would assume shorts are eventually going to continue to pile in. So I think that's very interesting what you mentioned, Monte, that it's, currently the data is still speaking in favor of shorts winning. Obviously that could change, but the fact that we're not seeing any OI change other than shorts closing, and we're now, back at the same level we were before the dump is to me still indicative of a short biased, trading populace. So not saying that, if you aren't in shorts now, again, you shouldn't just start jumping into things, wait for the rejections, wait for some of this to play out. But, it's just shocking that we're not seeing anything come in on the sign of bulls right now. So it's just, someone's got to say it, but, CJ, what are you looking at on your side of life? I know you've been ignoring a lot of the shit coins and cryptos. So, what's going on futures and commodities on your end?
Yeah, lots kind of interesting in terms of positioning. So let me just bring up my screen. You guys seeing that good?
Yep.
Okay. So this this daily candle really, I think, is like a textbook short, especially after it went limit down before close today. So I don't know. I mean, maybe I'll regret this. This thing has just been absolutely relentless this entire year, but conceivably it can't go up forever. I don't know. I think today's an interesting shot, even though we have closed basically. But
it's a hell of a
what do you guys think of that reversal candle? It was pretty steep, especially if you look on it in the 15-minute. Like, it's a lot of crowded like longs up there.
Wow.
So,
it's a heck of a sweep.
Yeah, I mean, I think, yeah, pretty much. So we'll see. I mean, I would love to get like a couple 100-point candle in this, just a huge long liquidation. It should eventually come. But then again, we'll see. That's one interesting position that I entered today. Also, like copper, silver, and metals in general continue to be weak. What's the dollar doing today? Basically flat.
Oh, flat, yeah.
So the fact that we have metals weak and the dollar flat, I think that's a very good sign for like copper shorts, considering the fact that it's kind of like a correlation failure. I think if you're going to have a pullback in the S&P or in equities, like it's starting to show itself in other asset classes. First thing I started with today was like oats, but that seems to be working a little bit more now, and following like the rest of the grains that have really sold off throughout the last week. So that's interesting. And then one trade that's helping this week, and we'll see, this is another one that kind of scares me like cocoa, in the sense that you've got to be very like fine-tuned when it comes to shorting these like turn picking, right? So these are very strong trending markets. Same thing kind of going on with crude oil today. And it's just like, I think energy might be at a potential turning point here. I mean, the positioning would suggest that it's crowded, and you're starting to see price action kind of go the other way. I also feel like everybody on television has been talking about buying oil stocks or buying various types of energies. Meanwhile, we've had one of the hottest summers on record. So the fact that we've had increased price action in like heating oil and crude during one of the hottest summers ever. Like, I like that counterintuitive price action, but I do think that there's a possibility that maybe they start giving some back. Either way, I am short this particular one, and if I get stopped out again above 310 or whatever, then so be it. But those look like some interesting like turning point assets, and something that might be able to reverse throughout like the end of the week. So that's what I've been keeping an eye on. But interested to hear if you guys have any comments or.
Well, that's a really good point, because I mean it impacts what the title is, and kind of I think what the general conversation is, and you know this better than most, CJ, is that sometimes the media lag. Whatever you're hearing on the media, like we're finally starting to talk about rising energy prices, even though they've been rising for the past 4 weeks, right? So, this whole conversation of is the correction imminent? Well, we did just get a nice little pullback, of most stocks and most risk assets. So it does beg the question, if CJ is correct and energy maybe reverses heading into the end of the summer, then maybe, what the impact that we're expecting is what we've already felt, and there is no kind of further expectation of negative impact. So that is something very much to consider moving forward. Go ahead.
I think that you'd see, like, I think that's a risk off trade, is like shorting heating oil or shorting crude oil is a risk off trade.
So you think if energy is decreasing, then also, most risk assets such as equities are also following that trade?
That's what it's, I mean, just from watching it like the last couple weeks.
Then maybe I mistook what your point was, but I think, but also, I mean, I think that's the difficulty of trying to trade this exact situation is, if energy is why inflation is going to tick up, and then energy ends up decreasing, and then inflation ends up kind of normalizing in end of Q3 into Q4, that may be a risk on after, energy's, kind of eased off. So I think that's why it's, and I'm kind of maybe agreeing and not agreeing with you at the same time, CJ, is we don't really know exactly what the movements are going to be. And I think this is a tricky time to really trade, directionality for a month or two. If you're going to take a long swing, I think this is a tough time to take a long swing. And do you guys agree with that? Or?
Yeah. I mean, I think we have to acknowledge that like I suck at like predicting the future, at least when it comes to asset values in terms of like short-term price action. So like I'm just looking at the positioning and then taking opportunities based on the positioning. Like let's say, for instance, you have like Dow, for instance, which is crowded long, and you also have heating oil and crude oil, which are both crowded long. Like those don't have to, like that correlation does not have to remain in place if you have a liquidation in both assets. The edge of trading versus positioning is that you're actually capturing like liquidations, which by definition are correlation breakdowns. So like not all this stuff has to be correlated. And like in COVID is a good example of this. When you have market crashes, correlations really don't matter. Everything will break down other than maybe the dollar. So I don't know how we got off on this tangent, but
yeah. Can I toss a question your way, CJ? It gets us a little bit back on track. I've been looking to trade some stuff that you've been talking about in the last couple of weeks here. Haven't really gotten a good chance to enter on any of the commodities. One that caught my eye today was ZL, soybean oil. What are your thoughts on that? Like, if you were flat that right now, or are you flat that, first of all? And if you were, how would you play that? Because that chart, I think, looks particularly interesting.
Yeah, the grains in general are pretty interesting. They were a nice short earlier in the week. I traded it around.
Didn't Turkey's grain depot just get bombed too?
I don't know about that, Nick.
I'm pretty sure I saw that on the news. I'm pretty sure there was a grain silo in Turkey that got bombed. That was supposed to be assisting the Middle East with the Ukrainian grain crisis. No.
Yeah, I don't know. Sounds like basically you've had a situation where there's been a tremendous run up in the grains, soybean family, oats, wheat, and they all got crowded, and last week you started to see a really big sell-off, and I was actually disappointed in the oats trade because it hasn't given back as much as like wheat and then corn. Those two grains got absolutely demolished. So time will tell whether or not oats goes down too. But to answer your question, Monte, I think you may have seen a lot of the longs get forced to cover on soybean oil maybe Sunday, but I still do think that that's a very interesting asset, especially as it now. Can we bring up ZL, please? I'd love to throw a 12 and 22 moving average crossover on that, because that one looks like it's, if you zoom out too, like if you look at the continuous contract going back throughout months, it's actually in a nice downtrend. So I'm not in this one personally, but I do think it is still very skewed towards the long side in terms of positioning, which means there still could be a lot of longs forced to cover should we keep going down. So like if we're looking at shorts and grains based on positioning, yeah, I like oats, I like ZL. Let me pull up my watch list for a sec. Let's see what else. Yeah, basically oats and ZL I think are good shorts.
I agree. I think that chart looked good. It's our rising price action on decreasing volume on an overall macro downtrend. I think you're onto something there. Another chart.
Oh, go ahead. Sorry, last point I'll make. And one thing that I've learned and kind of a mistake I didn't take initially when I started trading futures is like when you're looking at an asset or a commodity or whatever, it's very important to measure it against like its brothers and sisters within the family of grains or softs, whatever. And it's very interesting to see that like typically you'll see a situation where dollar goes up, commodities begins to go down. And that's kind of what we saw with soybean oil last week. But I lost my train of thought. I was gonna, yeah, come back. You'll have to come back to me.
We'll come back to it. Speaking of good trade opportunities, and this is kind of inverse a lot of what we've been talking about on the crypto side of things, but we just saw SHIB launch, and that's something we unfortunately didn't really cover in the TTC community because I hate sharing just meme trades, but this did have a news event, the Shibarium, which is some sort of L2 upgrade for whatever the heck is going on the SHIB protocol, if I can even call it that, but it launched higher, and so we're still seeing these news-driven events impact crypto, and this is a pretty large boost if you did trade. I mean, it's a 18% trade in the heat of the bear market. So something that does have news is OP has the base launch, I believe, in about 2 days. So it's currently on testnet. I'm pretty sure it's supposed to go into full production soon. And Base is, I think a sister of OP in terms of how Coinbase was launching it. It doesn't have a token, but since OP is kind of where the architecture came from, OP has been getting a lot of the boost from this narrative. And as you can see, even though if we zoom out, definitely been on a downtrend, it's one of the few that's, still in an uptrend for pretty much the majority of the summer when nearly everything has been down since I think, that 14th of July, the 14th of July was the XRP news date. Most things are down. OP is obviously up, and it just broke above resistance, which I guess it's technically that top level resistance is $1.77, and it's hovering around $1.78 now. So I probably wouldn't enter longs here, but I mean, if you really wanted to get overzealous and you're targeting a news event 2 days out, if it does confirm above this resistance, very similar to what we saw with SHIB, it could very much just kind of just zoom higher into that news event. And I would say, maybe, 217 is a little bit out of the question, but if I'm looking for the next set of highs, I'm looking probably at this $1.87, $1.88 number, maybe, maybe up here around that $2 number. And we do know the crypto markets love their even numbers. So I would look for $1.88 to $2 over the next 48 hours for OP based on the base launch number. Now, I probably won't trade this very heavily because I still kind of have a general short bias, and I do think that trading against your bias, it can sometimes be difficult. So, be careful with this one. But I think if you were to pick any coin out of all the baskets of coins and say which one's likely to go up over the next couple of days, OP is the only coin with news that everyone's been attracted to, and Base has been talked about a lot. So that's a possible bullish opportunity if you'd like to take it. So we're not all doom and gloom on all the cryptos. So
Yeah, it's the bullish opportunities are few and far between, but
exactly.
I just want to say I completely agree with everything you said there, Nick. And like, if you are going to long it, I would long it with very low leverage, because as more and more people get involved in this trade, you can expect to see more profit taking, more liquidations, and thus more volatility. But I still think in the grand scheme of things, we could, see those targets that Nick highlighted. So 100% agree with you, Nick. And I think that OP is like, if I could only pick one asset to be long, and like I had to invest capital into it, it would be OP right now.
Yeah. And very much with your coin sentiment last week, that's a quick trade. I would not sit there and be waiting for that $2 moment. If you're up 5-10%, take it and run, because it's the best long you're going to get in this environment right now. So.
Exactly.
All righty. Well, we covered a lot. Go ahead, CJ.
I was gonna say I remembered what I was gonna say. If you guys care.
Go ahead.
Yeah, let's hear. What were we even talking about? I forgot.
Yeah, it was a tangent after tangent. It just had to do with the commodities. And like, if you look at the softs that have just trended all year, like orange juice and cocoa, if they break, if they finally break, that could be an interesting sign with equities too. Like, that's just an interesting correlation that's been going on that I think you could potentially look to for like confluence towards equities here. Because every time equities have looked like they've been ready to break down, like you have like cocoa or orange juice, and then just like scream higher. So maybe if you see a break in both of those macro trends, maybe it's something to watch. I don't know, but just something that I've kind of been looking at the past few weeks here that is like come together.
Well, yeah, and I think just to kind of cap all this off, I mean, just in terms of market trading, it's going to get a lot more what we call PvP. For majority of the year, a lot of people were just typically bullish on equities, bullish on stocks, and that was obviously carried over into crypto. Maybe a lot more exacerbated on the crypto end of things. But now the conversation has really become, are we bullish? Are we bearish at these levels? And so that creates a much more difficult trading environment and creates a more, there's going to be more equality in terms of people entering shorts versus longs, or, buying versus selling, depending on their trade strategy. So I think if you're going to have to bear with us over the next 4 to 8 weeks, because I think this is going to be the most difficult trade environment in terms of directionality. Once we get past the summer and get past Q3, I think we're going to have a lot more solidity in terms of where directionality will fall heading into next year. But I think if you were to pick a 4 to 8 week time period in terms of chop, indecision, a lot of bets being made on either ends of the spectrum, this is the environment in which that will happen. And therefore, you're going to hear us on Monday and Thursday talking completely different directions, maybe just based on what played out over the past 72 hours, So that's just something to be aware of. And I think if anybody has a strong bias in terms of 8 week direction right now, I'd love to hear what your thoughts are, because I think I'm completely confused on where the next few months may lie. But that's why we're obviously talking about, these levels, these types of trades. What's a good opportunity now? We're not trading everything. We're only trading what we know. So with that being said, Monte, CJ, any final notes for the audience before we go ahead and get out of here?
Yeah, take a look at equity put call ratios just the next couple weeks. If we keep going down, if we get it spiking to levels in which we've seen local bottoms, that might be a nice place to look for. But as of now, the level is still pretty low. So a lot of puts are relatively still cheap. Obviously that's not as cheap as they were prior to the Apple earnings, but that's something that I would be looking at.
Good point.
Yeah, definitely important to watch. And of course, definitely watch for the earnings of Mara and Riot, which are coming up tomorrow and Wednesday after hours. It's gonna be really interesting if they follow the same suit of Apple, where they beat on the top and bottom, but then price action becomes negative. If that's the case, I would mark that as a massive narrative failure. And I think we see a lot of altcoins and Bitcoin even begin to slide. So I think that, back to that tail wagging the dog analogy, I think the tail is getting ready to start wagging with these earnings reports. And I think that it might bring down the dog a little bit. So that's just what I'm watching this week. But that's all I got.
All righty. Well, appreciate everybody tuning in. Again, if you want to join us at Trade the Chain, you know, where we are in 24/7 outside of our videos and where we post all of our setups and trading ideas and trade information and news and what we're looking at and staring at. CJ and Monte have been absolute beasts in there, sharing pretty much everything that catches their eye in terms of what they're talking about on video and of course in the community. So 14-day free trial at tradethechain.com. And again, if you want to trade with us on Didex, you can earn Didex and you get 5% off of fees at trade.didex.exchange/r/trade the chain. I know it's a lot, but it'll save you money. It's completely decentralized and you can earn money by trading on there. Just like just by trading like you would anywhere else. So with that being said, we're going to get out of here. We'll see you on Thursday for the next edition. And please, please, please tag us, hit us up, on socials or whatever. If you have any questions, love to interact, love to chat through ideas. So good luck. Happy trading. See everybody on Thursday.